Hey guys, Akil Stokes here. Welcome back to the Trading Edge video. We're going to hop straight into things today. I got a few trading opportunities that are on my radar that I want to share with you. The first is going to be on the Nasdaq. Now, before we get into the technicals, remember, and I think I actually deleted this from last week's Trading Edge video, but Friday was a big day in the markets. There was PMI news that came out for a handful of different countries, and the news that came out from America was pretty much a deviation from the expectation, meaning that the number was a little bit of a surprise in a sense that signaled the potential for a slowing economy, and the market put in some big moves. So today we're going to talk about how to take advantage of those moves. And of course, I have a contrarian approach because, well, that's how my investing went. When everyone goes left, you go right. So we're going to start off here on the daily of the Nasdaq. And again, the most recent thing that we have done is put in a higher high, higher close. It is very slight, but rules are rules. We try to make them as black and white as possible. As soon as we give ourselves the freedom to be like, oh, it's not a higher high enough, or it didn't quite do it, we get into trouble. So it technically is a higher high, higher close, which means a violation of structure to the upside. That signals a continued bullish trend, right? We've been in a bullish trend because this is the Nasdaq. But if you weren't sure, just zoom out your chart and see that we've been going from the bottom left to the top right. So I still have a bullish bias here on the Nasdaq despite this big red candle. So when I see this big red candle that formed at the end of the week, what I'm saying to myself is, okay, this is a little bit of relief. This is a little bit of a pullback, something that naturally happens in any type of trending market. And if I'm someone that's looking to hop on the trend, the question I need to ask myself is, one, where is this pullback likely to continue to next? What I'm going to do is I'm going to actually use my skill of reading a candlestick to identify a rejection zone. I wish I had a better technical name for it. I call it a rejection zone, this candle right here, because this is a zone where at one point price went down, and then got sucked back up. The sellers were rejected by the buyers. We can see this in a few different areas here on our chart. You can see it to a smaller degree right here before the continuation. We can see it here to the downside. We can see it here to the upside. We can see it here to the downside, right? There's all types of stuff, right? We actually have a workshop coming up soon where we're going to teach you this stuff. I have the details somewhere, but I haven't read them yet, so I can't share it with you. But early March, I believe we're going to do another 3-day workshop, and this is one of the things that we're going to teach you, kind of the basics and fundamental principles of reading a candlestick, because if you can read a candlestick, you can read the story that multiple candlesticks can tell you, and it just increases your edge in the market. But for now, these are rejection zones. So these are areas that I'm keeping my eye on for where this bearish rally or bearish run could terminate at. Now, as we go down to a lower time frame, we're going to get more clues, right? You can see we got like little tweezer bottoms down here as well. I'm going to go down to the 1-hour chart because this is going to give me the biggest clue. On the 1-hour chart here, you can see that despite kind of the big moves throughout the day, right? Big candle, a little bit of a pause at structure, right? So there should be no surprise there. Look left, structure leaves clues. This is the rejection inside bar, which is consolidation, and we continue to the downside. We actually ended the week with a little bit of deceleration. You can tell that, or you can see, I should say, that the slope of this move decreases, right? Steep slope here. And then we kind of get a little bit less steep. And then the size of the candles decreases well. Now, this could also be end of week, right? End of week things slow down as well. So we got to take that into account. But if this pattern were to continue, I don't know why I deleted that, I would start looking for reversals in this area. Now, when I say looking for reversals, right, looking for different pattern formations that signal a reversal. So I'm not just aggressive enough to buy right now. I think that would be a little bit premature unless you're an investor that's trying to buy and hold and you think this is a good price. But if you are a trader, right, you should be looking for clues of that reversal. They can come in many different ways. They can come in the forms of higher high, higher closes. They can come in the form of double bottoms. They can come into the form of a falling channel. You could put indicators on your chart, right? You can see the RSI is oversold right now. You can wait for this RSI to dip back above that oversold line. What's this down here? A MACD. One of our traders was looking at this, so I have it up on my chart. You can look at a MACD and look for, I'm moving the wrong thing here. There we go. Look for the same thing. Look for that MACD to cross back over the signal line or even above the 0 line, right? You can use Keltner channels, Bollinger Bands, right? There's tons of indicators that you can use to support as well. What's key as a trader is that, one, you know exactly what you're looking for, no matter which of the things I named it is, and two, you're consistent with that approach. The worst thing you can do as a trader is kind of do one thing one time, then do another thing another time, then look for a third thing the third time, because there's going to be no consistency to your approach. You're going to be all over the place. You're basically going to make a decision off of feel and think instead of something that is quantifiable in the market. So this is a good area to look for longs, in my opinion, on the Nasdaq. Again, we're looking for clues. Again, I'll go back to the daily. We can mark this zone out so you can see kind of the bigger zone here. Boom. Again, the range of this rejection candle all the way to the low here. That's the first zone. There's multiple zones here. But if we can get this opportunity within this zone, there's certainly a chance to trade it up, I would say, at minimum to this level right here, and then a retest of highs. And of course, if you're bullish in NASDAQ, you can hold for longer as well. So something to keep on your radar. The deeper we go, the better we get, because you're closer to that key area where, you know, ideally stops would want to be right here if you want them in the safest position. But of course, you can also put stops beneath whatever your actual entry signal is. Next up, we're going to take a look at the Dixie, the dollar index. And on this pair, this index, I guess you can say, I'm looking for a short. We most recently have a lower low, lower close, right? So just like we did with the Nasdaq, with the higher high, higher close, allowing us to make a prediction that price is likely to go higher. A lower low, lower close allows me to make a prediction that price is likely to go lower. And we've had a series of these already. We followed it up with an inside bar, so a little bit of consolidation here. So now that I think price is likely to continue lower, the question I'm going to ask myself is, where are we likely to continue lower to? And I'm going to pick out this nice little zone right down here, right? And that's where I think price is likely to continue to. And that does offer a good amount of real estate, a good amount of opportunity to make a trade down there. So let's pop down to our lowers again. You can see kind of the theme here on the lower time frames. We had a break below, close below here, view, violation. We had a pullback, right? Nice little flag pattern here. And then boom, we continued down. Ended the week doing the same thing, pulling back a little bit. Looks like a 382, which would be a sign of a strong trend. Let's just see if that's true or not. Fibonacci retracement, swing high, swing low. Yep, right at a 382. I do think there's a good opportunity that we can see one more push down to this level before the market has to rethink its decision. So trend continuation traders to the downside this time, look for a continuation opportunity on the dollar index down to what, 105.70, somewhere around that area at minimum. 105.50 is at maximum, I'd say. Lastly, I got a cool idea here on the Aussie dollar. It's going to be an advanced pattern formation, but one that could be used in a more aggressive way. And whenever we consider using advanced patterns in a more aggressive way, we always want to start off by taking a lay of the land. And what I mean by that is this. If you are an advanced pattern trader, that is a system, a strategy that stands alone, meaning you don't really need to do analysis. You just hunt for thy pattern, right? See thy pattern, take thy pattern, profit off thy pattern. But if you do overall analysis, and I do think there's a benefit to doing overall analysis, at least at some point in your trading career, and you have a greater lay of the land, a greater predictive idea, you'll often find yourself in situations where that advanced pattern, right, falls in alignment with that greater idea, and it gives you the chance to make a little bit more profit off of it, right? It doesn't win all the time. Obviously, nothing wins all the time in the market, but you're putting yourself in a situation where you're more likely to win big versus being less likely to win big, right? So it's a nice little trade-off there. So here's what I'm looking at here on the Aussie Canada. We've recently come down and put in like a consolidative switch. And what I mean by that is this, right? We've come down off this big move here. We've kind of bounced around a little bit, spiked all the way down here, and we end it with not only a break and close above these highs, the highs of the consolidative period, if my thing works. Nope. Just gonna keep on talking till it does. Yeah, look at that, first time, right? Not only did we break and close above that level, but we put a nice little high and tight flag and broke and close above that level again, giving us a sign that we're likely to continue higher. Now, There is a problem here because the question is, where did we continue higher to? Well, if we look left, because structure leaves clues, you're going to see that we've come up into a rejection zone, like I mentioned earlier, right? You can see this candle right here. And if I take my box tool and I go, it's going to be weird, I always go left to right. If I go to the left here, it's hard to do. You're going to see that we're at a pretty recent level of structure support. And you're probably looking at yourself like, I don't want to mess with that. But here's the thing, and this is a tool that is newer to my arsenal. And by newer, I mean, 2 years ago I started using it after 2 years of study. Yes, I studied it for 2 years. Can you imagine? I actually studied it for a year in a way that I never intended on using it. And then it found a way, with the help of the traders on the Tier 1 trading platform, of a way to use it. And then had to invest another year in doing that to make sure it was actually usable, right? I'm very patient. I'm a good trader. Things are going well. I am making money. I am in no rush to kind of like add something new to the mix that will disrupt everything. So I've afforded myself the opportunity to be patient. But what that indicator is going to be our volume, specifically our horizontal volume. So what I want to do is, and why I like horizontal volume is because it shows me, I look at volume as being synonymous with like support and resistance. I'm massive on horizontal support and resistance, so this kind of falls right in line with it. And what I'm going to do is I'm going to take my horizontal volume tool. It actually has a name. What's the name called? It's anchored volume profile. There we go, or fixed volume profile as well. And I'm going to drag it from my swing high to my swing low here. And I want to take a look at what areas are of importance. And pretty much to simplify things, because that's how I like to roll, the area in which lines stick out the furthest be thy area that market cares about the most. And you can see that there's a lot of areas the market cares about, and that's no surprise because we've had a lot of consolidation, right? Here's a tip. Areas of consolidation are typically going to be the period where the bars stick out the most, because in consolidative area, it's typically a big battle between the bulls and the bears. So there's a lot of interest on both sides of the market until it ultimately decides which way it wants to go, right? Ooh, couldn't continue in that voice. That was all I had. That brings up a good point. I'm going to say this that way. I'm forced into doing it. I got a really good question the other day. If I can find it, I'm going to do a Trading Coach podcast episode on it. And again, this is my way of holding myself accountable. I said, hey, Akil, it's me again. It's always great to introduce yourself. I have to ask, right? There was an institutional trader named Blank who says that day trading is a waste of time, that big institutions don't even care about chart patterns and indicators, making them pointless to use. He goes on to say it's all about fundamentals and trading on higher time frames. According to him, technical analysis is for analysts, not traders, and day traders don't make money at all. What's your take on that? And I thought that was a very good question, because where I'm going to take that question is talking about how institutional traders actually operate, and how as retail traders, our job isn't to trade like institutional traders. Our job is to understand how institutional traders trade and the areas in which they trade, so that we can kind of hop on for a little bit of the ride while they do all the sneaky things they do. So volume is a part of that, which sparked the interest. But I also want to shamelessly plug the podcast. I can't even promote my stuff the right way. I'm horrible. I wanted to shamelessly promote the Trading Coach podcast, because it's an awesome podcast that comes out 5 days a week, and you should listen to it because it's very, very good and covers a handful of topics about everything trading related. So to make it short, long bars equal area of interest. And what I like to look for is I like to look for these voids, right? These little areas where there's kind of no interest here, no interest here. And that kind of tells me if I'm driving in a traffic jam or if there is free sailing. And you can see that we have a little bit of a void here, and we don't really pick up until we get to about this area. And what that does is allows me to say that, hey, maybe this isn't the ultimate stopping point for price action, and that we could indeed push up a little bit higher. And that push a little bit higher is all I need for my potential home run trade. So down to the hourly, right? I think it's the hourly. 4 hour, maybe? We'll see. Nope, not the hourly. No, yes, the hour. Well, 4 hourly. There we go. 4 hours better, right? So we're going to keep this in mind. I'm going to keep that box there. And actually, I'll just redraw it in. We'll kind of focus. Let's keep it on. Delete the volume. I like clean charts, guys. I like clean charts and I cannot lie. Those other traders can't deny, right? Yeah. All right, so here's what we have here. We have a potential advanced pattern formation. It's going to be called a cipher pattern. I'm going to go through this quickly, but we're looking at, I'm going to get my cipher tool here on. Boom. We're going to go swing low to swing high is X to A. Swing high to swing low is A to B. Our mini extension higher is going to be our B to C. And if we come down to our 786 Fibonacci retracement, that is going to be our D completion, and the zone of completion is going to be right here, again, at a nice previous level of structure. Now, since I'm predicting price to go to this level up here, that gives me the opportunity, instead of trading the cipher pattern, which would normally be what, first target's like about right here and second target's about maybe right there. This allows me to, well, there's different ways I can do it, but one, all, or some of my targets can be shot for a little bit higher in this zone. And a place I'd like to look for is the 127 extension from the extreme of the pattern. So the swing low all the way to the swing high here and back down. And you can see, oh, look at that. I promise I didn't do this earlier. The 127 lines up right at kind of the early zone of that level that we pointed out higher. So again, there's a difference between this, and I would recommend not doing, I recommend doing whatever your trading plan says, but I recommend doing this with like a partial position, not your full position. Always take some money off at the kind of the area in which you want to take it off at. But this makes a difference between, let's just say we're going to take a normal target 1 and we're shooting for target 2. This makes a difference between the target 2 being about 69 pips versus 160 pips. So you've pretty much almost doubled your potential profit there. And it's not just a random thing that you're doing because you're greedy. It actually comes from your analysis. Boom. Hope you guys enjoyed the video. Make sure you're a subscriber to the channel. That way you don't miss all the awesome stuff I upload. I mentioned earlier, Trading Coach Podcast episodes 5 times a week. Short, quick trading tips on the YouTube Shorts part of this channel as well. I usually upload about 2 a day. This is just a place you want to be if you want to get better with your trading. Also, remember that we have that workshop coming up in early March. Again, I apologize for forgetting dates and stuff like that, but I'm sure I'll promote it everywhere that I try to promote stuff at. But be in the loop for that, because we do close the doors after a certain amount of people register, just because we like an intimate experience, not in a weird way. All right, until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is